Boom shakalaka, watch out for this surprise Bitcoin volatility. You definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, a lot of very interesting charts for Bitcoin and cryptocurrencies, including watch out for the surprise volatility, what exactly that means in the short and long term. But before we get into it, guys, like the video, come join us on Twitter with Crypto Love, where we share all of the charts from today's video. Now, fear and greed today at 72, down from yesterday's 76. Extreme greed back to normal greed once again. The overall market sideways today. Bitcoin at 51,590, Ethereum at 27.93, BNB at 354, Solana 109, XRP 55 cents, Cardano 62 cents, Avalanche $40, and Dogecoin 8 cents. And Bitcoin, look at this, was going pretty much straight vertical, has broken through there. Watch out. That could be a bad sign. Might have price retracing to either 50,000 big even or even further towards this line of support here. So we might see a little downward price move in the short term. Now, is this a surprise? Not necessarily. In this chart right here, taking a look at the Bitcoin hodler net position change, we can see that this red line has reached the negative 50,000 mark. When this happens is one of a few critical moments in Bitcoin price, either a cycle bottom, a mid-top, or the beginning or end of a parabola. Well, we can rule out a cycle bottom because we know that occurred back there about a year ago. Mid-top is possible. If it's a mid-top, that means the price comes down. The other options would be the start or end of a parabola. Now, if it's the start of a parabola, price would go up. If it's the end, price would go down. I don't think it's the end. So this gives us pretty much a 50% chance it's a mid-top and a 50% is the start of a parabola. But also there's some other indicators that say price might come down, like this one right here. The TD sequential presents a sell signal on the daily chart. And this has been right 1, 2, 3, and could be right 4 times in a row since December. So we could potentially have price dropping from here. Also, you just have to consider there's a lot of people playing with heavy leverage, both shorts and longs, and with Bitcoin price right here riding between levels of shorts and longs could push the price up or down dramatically in the short term. Now, should that defer you from what you're doing? Not necessarily, because if we take a look at the overall picture of things, we are in the 2 years of high Bitcoin price gain, this green line right here. From 6 months before the halving to 18 months after is generally when all of Bitcoin's price gain happens, because the other flip 2 years of that, actually Bitcoin loses price. So based on that alone, Bitcoin price should be headed up. We also have very minimal overhead supply above where the price has moved. Less than 10% of Bitcoin's total volume has moved in territory above $50,000. So could be clear skies if price moves up. Right now, we can see, based on this chart, the Bitcoin number of new addresses, that the price is actually being fueled by institutional demand, not by retail at this moment. Now, this chart takes a look at the the decrease in number of Bitcoin addresses on a regular basis, which tells us that this is larger parties, less wallets, accumulating this Bitcoin. And as we can see, as long as the trend continues, which as of right now, roughly 6,000 Bitcoin per week are being purchased. As long as they keep accumulating, or per day, are being purchased, as long as these continue to be purchased at this rate, yes, price will go up. As a matter of fact, if we extrapolate what's going on just from BlackRock alone, accumulating roughly 4,000 Bitcoin a day, if they do this for the entire year, that would be roughly 1 million Bitcoin, or over half of the total supply of Bitcoin available on exchanges, which would dramatically drive price up if this continues. Now, I think this probably will continue for quite a while, but in the short term, there is the possibility for a lot of volatility, like we talked about in the beginning of the episode. Now, in the long term, we can see here, just based on Google sentiment, this is Google search trends, right now, 18 out of 100, barely anyone is searching for Bitcoin. There is right now very little demand other than institutional demand, but very little common popular retail demand for Bitcoin. Once this shifts and we start seeing heavy demand like we saw in 2020 and 2021, that's when the price is likely to go through the roof. Because as of right now, if we take a look at trend accumulation score by cohort, only the whales are buying. Anyone with 100 Bitcoin or more are buying right now. Everybody else is kind of lukewarm or selling. So it's still very, very early, in my opinion, as to what could happen with Bitcoin price. And you can't forget that in 2 months' time, we have the halving coming up, where the number of Bitcoin rewards per block mined drops by half. What does that mean? Well, right now, it costs roughly $31,600 to mine one single Bitcoin. In 2 months' time, that's going to double. That means it's going to be $63,200 per Bitcoin. And based on my phenomenal mathematical capabilities, that number is still higher than today's Bitcoin price. Which brings us to this last chart right here. We did have a recent breakout of this Bitcoin cup and handle, which with the projected target, based on the size of the cup, would be roughly $145,000 per Bitcoin. So things could be about to get smokingly hot. I would just say a little bit of caution in the short term. That's all for today's episode. If you enjoyed it, push the like button. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.
From now on, if you don't own Bitcoin, you're a moron.